right, welcome back to the channel, and today we are talking about ET, ticker symbol E, literally ET, but it stands for energy transfer, okay? And this is a stock that I have recently added to my dividend portfolio, and I will be looking to pick up even more shares of this particular asset in the coming weeks. I believe that this particular stock has the ability to grow substantially over the course of the next 10 years, okay? And aside from that, it has a beautiful, beautiful dividend payout. So right now, that payout is around 8%, okay? An 8% dividend payout. And get this, I think it has so much upside potential that you are going to, it's potentially a valuable asset in multiple areas, okay? So you're going to get that 8% massive discount payout. And along with that, I believe that over the course of the next decade or 2 to 3 decades even, that you will be looking at a return of growth appreciation of the stock and asset appreciation of the stock that is going to blow some of your other investments as far as dividends goes out of the water, okay? Again, I've already added this to my portfolio, and I'm going to tell you why right now. So, what is energy transfer? Energy transfer is basically responsible for all the transportation of your oil and gas, okay? So they're behind your oil, your gas, and all of the various types of coal energy that we use right now. So when I was looking at this, I said to myself, well, I always go to the competition in whatever stock I'm purchasing, whatever asset or business that I'm investing in. I always go to the competition because I want to see what they're up against. Right? That's only natural. It seems only natural to me. It's like the art of war, okay? You want to know as much about your enemy or your competition as possible so that you can change your strategy and adjust what you're doing on your side of the battle accordingly, right? It just makes sense, okay? So, what is the number one adversary to energy transfer company, to oil and gas? I think we all know it. It's renewable energy. Renewable energy comes in about 5 to 6 to 7 different forms of renewable energy right now. Here's the problem with that. Renewable energy right now is not cost effective. Renewable energy right now cannot be obtained 100% because 1, we have not done enough research on it. 2, we do not have the finances to put behind it. And 3, it is just not economical in terms of being accessible to everyone right now. Now, are they working on it? Yeah, absolutely. Sure. Of course they're working on it, right? But let's get a realistic target of where renewable energy could possibly come in. Because if I'm investing in, again, a company that is behind the transportation of oil and gas and all of that, I want to know how likely is it that over the course of the next 50 years, okay, that I'll be alive, hopefully, God willing. Over the course of the next 40 to 50 years, how likely is it that this business will be put down, that they'll be put out of business? Well, let's see what the outlook is on renewable energy, and I think we'll get an answer. Need to know in 2021 is that in less than 10 years, electricity from solar, wind, and water could power the entire world, according to leading energy experts. Yes, they do mean every country in the world. It would be an enormous effort and cost a few $1 trillion. This was back in March of 2024. Is it possible? Yes. Is it likely? No. Let's continue reading. I told y'all that it was 6 to 7 different resources or sources of renewable energy. But what my question is, what I want to know is how often, okay, how long will it take the world to actually achieve 100% renewable energy? Listen to this. It says, according to Oxford Brookes University, the world can reach 100% renewable energy by 2050. Obviously, that's about 25 years from today, okay? Other recent studies show that a global transition to 100% renewable energy before 2050 is possible. These studies simulate a global transition across all sectors, including power, heat, transport, and water sanitation. And listen, here's the problem with that. When you're talking about coulda, woulda, shoulda, essentially is what we're saying. Is it possible? Sure. Is it likely? No. Why? Because it costs too much money. Why? Because we've already put too much money into these oil and gas companies. Why? Because companies like ExxonMobil, right, and Shell could you imagine the backlash that the government would receive if all of a sudden these companies no longer existed? The companies that have given the government so much money, the companies that have paid the government so much money in taxes over the course of the years and supported them with oil and gas, for these companies to overnight just disappear. America would never do that to these companies. Why? Because they've given them too much. There's so much more attached to that. So, because of this, I believe that 100% renewable energy will not happen until the next century, y'all. This is my personal belief. I personally believe that this world, at least the United States, okay, the U.S. will not be 100% renewable energy until the year 2100 and beyond. Honestly, that's what I believe. Because oil and gas and coal have way too much. Listen, it runs the very world. It's behind everything that we do on a day-to-day basis. It's too fundamental right now in what we do as an economy. It's too important to what we do as an economy right now for it to just disappear in 25 years. I don't believe it. I don't see it happening. That's why these companies are still making money hand over fist. That's why people are still investing into companies like ExxonMobil and BP, right? That's why investors aren't going anywhere, because they understand that in the future, 30 to 40 years from now, these companies will still be around. They'll still be making money hand over fist, and they're still going to be worth billions to trillions of dollars, right? So let's get back to ET, energy transfer. I got to pull it up on my favorite website, Stock Analysis. Right now, at a current price of $15.93. Let's look at the overview before we get to the forecast, before we read into the forecast. So the overview, and I want to go max chart. I'm going to start with max chart here. Max chart overview is down over 6%. It had a major dip in 2020. And we all know that March of 2020 was around the pandemic times, right? So everything was on the fritz. After that, it has slowly built its way back up to a respectable position, almost to where it IPO'd, which was around $17. Okay? So, if you had invested, but the point is, if you had invested in this from day one, 6 years ago, you would have lost money. You would have lost money in stock appreciation, right? And you would have lost money in growth. Just for the timing that you would have spent invested in this over the course of 6 years, if you consider that money could have been allocated somewhere else, of course, as with anything else, it's a loss. So, however, let's look at the last 5 years. The last 5 years, they're up 6%. Last year, they're up 25%. So if you had invested within the last year, you would be up. It does matter where you get in. I do want to say that going forward. For all of my investors, whether you're investing in dividends or growth, it does matter. It absolutely matters where you get in on the floor. If you get in at the ground level or if you come in later, it absolutely does matter. I know they say that you should not time the market, right? You should not try to time the market, but I believe that that's only the case for index funds and ETFs. You don't try to time those. Index funds, you just invest in that and you let it do what it does. But when you start talking about investing in individual companies, it absolutely matters where and when you invest, okay? It absolutely matters where and when you invest. So let's look over the course of the last month, 0.44%. You guys see it. The price right there is $15.93. Let's go into the forecast, all right? The forecast right now, according to 6 analysts, again, keep in mind, these analysts are people just like you and I, people with opinions, all right? So these 6 analysts with a 12-month price forecast for Energy Transfer LP stock have an average target of 18.5, so $18.50, with a low estimate of $14 and a high estimate of $24. So right now, that would make this particular asset a strong buy, according to those analysts. And if we go over to the dividends, I told you all that you have that beautiful yield payout, which is 7.97%, 8%. And this dividend is paid every 3 months. So it's a quarterly dividend that you are receiving. And if you go and look at their dividends and you look at the dividend history, it's a little all over the place, okay? It's a little all over the place. So you've definitely seen, okay, some cuts with this. You've definitely seen some pullbacks with that dividend. However, 8% and investing in this at under $16 right now, I consider, me personally, I consider this a great bargain. That's me. This is what I'm doing. You don't have to do this. Do your own research and come to your own conclusions. And before we get out of here with this, I do want to just go a little bit deeper and read a little bit of this article. One way Energy Transfer stock can make you a millionaire. Since 2006, Energy Transfer stock price has risen by just 187%. The S&P 500, meanwhile, produced a total return of 489% on the 489%. On the surface, Energy Transfer hasn't proven a great long-term investment, but this is why it's critical to look at a stock's total return, not just its share price movement. Total returns account for actions that can affect shareholder profits, like dividends and spinoffs, but that aren't necessarily reflected accurately in the stock price. For its part, Energy Transfer has been a prolific dividend payer. The current dividend yield is around 8%. These big dividends aren't included in that stock price movement. In fact, they tend to depress the stock price given the reduction of cash on the balance sheet. When including dividends, Energy Transfer's total return shares produce an 882% profit for shareholders since 2006. That's nearly double the S&P 500's total return over that time period. This type of return can help everyday investors become millionaires. It will still take several decades of consistent saving, but by investing in stocks like this, you can produce returns that transform a few $1,000s a year into a sizable retirement nest egg. Just don't forget to retain and reinvest those dividends. In addition to that, says Energy Transfer isn't done making deals. Acquisitions are supplying Energy Transfer with lots of fuel this year. The Master Limited Partnership MLP closed 2 sizable deals last year, while its affiliate Sunoco recently made a needle-moving acquisition. This trio of deals has the company on track to grow its earnings by around 10% this year. So, with all this data, and I'm not going to read the entire article because that would be boring, but listen, I read this stuff because it's interesting to me. Listen, I think I've given you all enough information here to at least take a look at this on your own and see if Energy Transfer, ticker symbol ET, is something that you may want to add to your dividend portfolio. You all let me know what you think down in the comments, and I will see you all in the next video. Thank you for watching. Later.